Well, every time when there are too many moving parts in the market and then too many moving parts in the economy, to really find simple analysis of complicated problems, at least personally over the years, I've leaned on Ramesh Damani's advice. And guess what? He's obliging us today on a morning when we're trying to really grapple and understand which way the world and the market would move. So, always a pleasure, Mr. Damani, to have you on ET now. And my introduction, I guess, was the question in itself, which is that every time when there are too many parts of a moving puzzle, you're the right man to fill in the colors.
Thank you, Nikunj. Thank you so much for your kind words, and I hope I can add some clarity to your investors' decision today. Thank you, though, very much for introduction.
How should the world look at the tariff announcements by the US administration? Old school economists are saying that this is against the classic economic theory. This means inflation comes back, deglobalization starts, and that is going to lead to serious contraction in US economy.
You know, Nikunj, there's a movie out now called The Emergency, and I remember that as a young student at that time. In 1975, Mrs. Gandhi then imposed the emergency. They arrested one of the tallest leaders of the opposition at that time, Jayaprakash Narayan. And I distinctly remember what he was quoted in the press as saying when he was arrested and escorted to jail. He said, Vinash Kale Viprit Buddhi, which loosely translated means that one bad days a year, you make bad decisions. And I feel the same thing about what Donald Trump is doing. It's a Vinash Kale Viprit Buddhi. The order that has been built by America, NATO, Bretton Woods, WTO, GATT, is being undone by a man in a stunning space of 10 weeks. So I tend to agree with what the economist is saying, that the world as we knew it and the world as we prospered in the last 75 years is irretrievably broken and changed. And I think he's done it in a space of 10 weeks. It's actually unbelievable to me what's happening to the beloved country of all of us, which is America.
So, Mr. Damani, if the shape of the world is going to change, and if we are looking at contraction, and I hope not, if a recession comes into US, then financial markets actually should be in some kind of an panic mode. But stock markets are down, but they are not out. Somewhere, if I look at Asia, also including markets like India and China, where tariffs have been imposed, they are doing well, at least today. So, are markets getting complacent? Are they ignoring? Are they closing the eyes to reality and what is coming?
Oh, I think the markets are actually being wise, Nikunj. I think what will happen is that we will finally decouple from America in a way none of us imagined it to happen. I think the American, when they look back in history, they will say November 5th, when Trump was elected, was the peak of American power. I think the world will move on to new alliances. For example, the new SWIFT system, which international payments have been taken over, is now being challenged by a Chinese system. The new regional blocks being formed across the world. I think with stunning speed, the world is moving on. And if the US completes looking insular, it will slowly becoming less of an economic power. While there's no dispute today in my head that America is the preeminent economic superpower in the world, it is not the only superpower in the world. There are other economies that are strong and fighting, and the US has to respect their opinion. The fact that they unilaterally move and do all these things, whether it's against Mexico, Greenland, Canada, NATO, is just stunning to me. I mean, would you want your children to now go and be educated in America under the threat, if they say something that the administration doesn't like, they could deport them to Venezuela or Salvador or wherever they're doing it. It is stunning, the fall from grace in America. 75 years they built soft power in America. I mean, to give you a more pertinent example, Nikunj, recently a neighbor, Myanmar, had a very strong earthquake, a 7.7 earthquake. Indian planes, Chinese planes, Russian aid were all available within the next 24 hours. I haven't seen signs of US aid yet delivering because it has been dismantled by Trump. So I think what we're going through is an enormous change. But as water seeks its own level, the economies will move on. I think if you try and embarrass and humiliate world leaders, you have no friends left, and they will form new alliances, which is what I think we're in the process of doing. I think the US, and it's very hard for me to say that, the word of the US used to be the most paramount word and the word that everyone would listen to. But I think increasingly, thanks to Trump's policy, it is becoming less important. I'm not sure even still today understand what Kool-Aid the US senators and the US congressmen and the US representatives have drunk, but clearly they drunk some Kool-Aid.
So the slowdown in US or the crackdown of the US economy, when it will come, given the sheer size that it is almost a $40 trillion economy, 70% of the total debt in the world is still directly, indirectly in US, could that hurt the world before it gets better?
I mean, it could, but I think largely no, I won't say largely, but it is starting to get discounted by financial markets very, very rapidly. My personal feeling is, the great historian Arnold Toynbee used to say that countries die not because of murder, but because of suicide. And here you're seeing a case of self-immolation. But what will happen? Let me give you an interesting example, Nikunj, to explain this point to you. In 1970s, 60s, when America was in war against Vietnam and the body bags started coming home and the war wasn't going anywhere, Lyndon Johnson didn't know what to do. And a senator, I think, advised him. I said, if you're America, he said, let's just declare victory and reverse course and get out. And I think that's the same advice that Trump is going to receive, that he will just declare victory in the next couple of weeks and then change all the policies that he's introduced, saying that, oh, my policy has been achieved, everyone's come to the negotiating table, everyone's scared of America, and he will declare victory because he'll never admit loss. He will declare victory and we will move back to the regime we were. But unfortunately, we find out that the world would have moved on by that time. So my sense is that in the back end of this year of 2025, all these measures that seem so draconian and so unrealistic are likely to be reverse course. I cannot imagine America with higher inflation, higher housing prices, poor securities, no friends existing or going on for more than 6 months.
So, Mr. Damani, can I say that what looks like an iron fist right now from the US administration, it's a matter of time an olive branch would come, and the tariffs, which may look draconian, which may look very high, ultimately things will mellow down and things will start coming back to normal?
I think that will be one part of it when they realize themselves they've bitten more than they can chew. Yes, definitely that will happen. But I think more importantly, and I truly believe that the world is moving on. I think the world has tried to be patient, tried to kiss the ring, tried to, mollycoddle him. They visited him. You can't, as a US president, ever say that Canada is going to be my 51st state or Greenland is mine. You just can't say that. You negotiate it, maybe have a treaty, maybe spend years trying to put it together. But you can't use the threat of force in the world. The world has changed completely. It's not the world of the 1800s or 1850, which Trump harkens back. So I think, yes, they will reverse it. And B, the world will move on. So the world will continue to prosper. I think that people, US is only 300 million people. There's 8 billion people elsewhere in the world. They want a better standard of living. What is ironic and what is tragic, Nikunj, is though America taught us all this, free markets, competing global, immigration, and they themselves are turning back on what has been the greatest strength. So I think the world will move on. I think that's my call, basically.
I've learned this from you, that whenever a big event is coming, read and be prepared. So I actually happened to read Adam Smith's famous book, Great Nations, on the impact of globalization. And this is completely opposite of what financial history has taught us in last 200 years. This is completely a recipe of what not to do rather than what to do. So what should investors do, Mr. Damani, now? Divide the world into two, look at companies and sectors which will benefit from their internal growth rather than external growth, and avoid anything which is directly or indirectly dependent on US?
I think you're right. I think this whole principle of comparative advantage is so important in the world. It has made the world prosperous. It has made the world, expanding. We haven't had a great war since in 75 years. And you're going back on all of that. So to answer your question more directly, what should an investor do? I think first, don't panic. I think India has its own strengths, and we will recover from this blow, as markets are even suggesting right now. But instead of looking, when we were young in the 80s and 90s, we always look for export-oriented centers, people that earn in dollars. I think you look now at people who are prospering in the domestic economy, people who are not impacted by tariffs or tantrums that Trump is throwing at them. So you look at those sectors, you look at sectors with some intellectual property. I think China seems like a big loser right now, but China is already building the capability to take on America. And it, as might seem like heresy and might seem like too fast pronouncement, but we could see the rise of China in the next 20 years to take on America as a rival. I think clearly, in terms of what they've done to their economy, in terms of technology, in terms of trade, they're now trying to match America, and America is not understanding. The fact that they've got DeepSeek out there suggests that they've made very rapid advances in chip technology, very rapid advances in artificial intelligence, which has been America's growing point. So I think Trump is overstating his strength. Instead of working and bringing the world along, he's found a world suddenly with the US has no friends. Canada's best friend is no longer a friend. NATO and Europe, best friend, no longer a friend. And China, on the other hand, is building alliances, Silk Route, Brazil, even making a rapprochement with India. I think people are moving on. So I think you're right. You need to rejigger your portfolio a little bit. But I don't think there's any reason to panic. India is a domestic, internal-facing economy. It has enough strengths. And we don't want to go back to, I recall the India of the 70s and 80s in which we grew up, Nikunj. We had the ambassador car when we had tariffs and protectionism. Do we want to go back there? People don't remember that, but in 77, 78, and when Japanese imports started coming to America, the American cars were a joke. They were such a poor quality that people wouldn't buy them even at 20, 30% discount. So once you have protectionism and tariffs, the quality will start deteriorating, the prices will remain high, and there'll be a stagflation quagmire which is going on in America. So I'm pretty hopeful sitting today that A, the US will reverse course, and B, the world will go on though.
So, Mr. Damani, that brings me to my next obvious question, which is the market reaction today. Banks are up, they're domestic facing businesses. IT is down because it is dependent on global factors, and especially Indian IT companies are getting dominant amount of business from US. So is the market reaction justified where you need to switch out of at least IT and pharma and back to perhaps, domestic oriented sectors?
Yes, to fit to domestic oriented sectors, yes, your portfolio should be allocated there. Somehow I do have exposure to technology and they are down, as you correctly pointed out. But I think it's a fairly rigorous sector for the next few years. So I wouldn't be in a hurry to get out. I think they'll do fine. I think the whole world runs on software, and you kind of get that processing power in India, the GCC capability in India. So it's hard for me to see the sector going through a very strong recession. There's probably a more of a knee-jerk reaction.
Damani, you've always said the following, that every time when there is a reboot in the system, crisis will always create opportunity. So in this reboot right now, where in the market an opportunity is getting created for long-term investors? I'm using the word long-term investors.
Yeah, I'm glad you're using that term because that's really the good way to look at the markets. We tend to look at markets in 3, 5, 7-year snapshots rather than what will happen in a quarter. And I think one theme that has pervaded this bull market for the previous 5 years has been the leadership among the public sector stocks, because they have shown that corporate governance can improve, order books can improve, and they can deliver on the results. So I would continue to bet. They're largely domestic facing, so I'll continue to bet on some of those sectors. I think one sector that stood out today was the pharma sector, because it has been exempted from tariffs for now at least. But within the pharma sector also, we are finding enormous opportunities in Indian companies that are building intellectual property for the first time. So I think within that sector, we'll look at those companies too. There's something in physical digital infrastructure that I've been mentioning about, which probably will get a boost given the fact that we're going from analog to digital. So I think there are plenty of pickings. I think you decide what you want to bet on. If it's exporting directly to America, I'd probably reduce my weightage there. But having said that, I remain optimistic about India and optimistic about the bull market continuing.
I will specifically pick up some words because we've discussed these points in the past, and these are some points which in a sense you are now getting identified with, which is first is PSU. At the at the peak of pessimism, you said I am a buyer in PSU stocks, and last time when we met you said that the leadership in the PSU stocks is not over yet. So are you still confident that PSU stocks have a long way to go? If yes, why?
Yeah, I've changed some allocation. I've gotten out of some old stocks, got into some new stocks. I think if you look at say the two sectors that I'm particularly bullish on, the defense and the construction space. I think they have very strong order books, very strong visibility, good dividend yields coming through, better corporate governance, and they're completely domestic facing. So I think they will do fine over a period of time. So we continue to like those sectors, Nikunj. I also believe that the bull market, the last 2-3 months was a very severe correction in the bull market. The bull market has started again. I think we bottomed out and we started again. And I think this was just one more roadblock on the way to the bull market, which the market may have conquered today or may conquer within the next few weeks.
You also mentioned last time when we met that I'm fully invested and the bull market is not over. So are you fully invested right now, and why do you continue to maintain that the bull market is not over, given that economy has slowed down, given that the base effect has kicked in, given that now we are staring at a probable slowdown in the world because of tariffs?
Good question, Nikunj. To be perfectly candid with you, I had taken some money off the table when we had the wobble in October, November. I was getting nervous, so I also took some money off the table. So as a matter of fact, I'm not fully invested, but I'm looking to get fully invested. I'm looking again to place my bets in there. Why do we think the bull market is continuing? Because that was the first correction we got out of 4 or 5 years. So it's typical that you will go through corrections and shake out. So only people who are convinced will be able to make the true money that a bull market offers you. So that was just a shakeout, I believe. Within the, say the market peaked out at the end of September. By October, November, you're finding individual stocks, large quality, broadly traded stocks were started making new highs. Bajaj Finance, Shree Cement, United Phosphate, a lot of stocks are making new highs. That can't happen in a bearish phase of the market. It had to mean that market is just rotating in and out of stocks. So the fact that making new highs was very hopeful to me. Secondly, I spent the last 3-4 months visiting a variety of companies. I've visited various companies, just knocking on the door, trying to find out what's going on. And everywhere I go, Nikunj, what I'm finding is people talking about expansion, growth, profit, margins, taking on the world. I see no reason to be bearish because the entrepreneurial class has taken hold in India, and there is no leverage in the system. Bull markets typically end when there's excessive leverage. You had leverage of the size of a mid-cap company in the Indian stock market. So I think all the signs indicate that what we experienced in the last 3 months was just one of the very severe corrections. And the market will probably resume, and I would dare say, take out the old highs in a matter of time.
My producer is insisting on my ear that 20 minutes done. And I'm going to just request him that Mr. Damani is an old friend and we don't get a chance to interact with him. So I'll take the liberty of extending my appointment by another 10 minutes. Is that all right with you? I've got lots of questions.
That's quite all right, Nikunj. Always welcome to be on your show.
Mr. Damani, so that brings me to my next question, which is that every time a shakeout happens in the market, leadership changes. I'm going to quote you again, sir. This is a quote which I learned from you, I think, 10, 12 years ago. Courses remain the same, horses they change. So the course is India. Where are the new horses?
Again, Nikunj, it's a fluid question. I believe that the leadership will still rest among the public sector stocks, as I mentioned before to you, among this digital infrastructure. People are building the digital infrastructure. The basic, UPI, KYC, Aadhaar, Digi Yatra, those kind of applications, there are multiple companies there that you should be taking attention for that, because this country is leapfrogging, is going from the analog age to the digital age. So while our highways and dams and stadiums may not be on par with the rest of the world, I think in digital infrastructure we've stolen a lead on the world. And the companies that are doing that are still broadly unrecognized and still offer a lot of opportunities, not only in the domestic market, but also in global markets, because some of them have variable models of revenue. And as the base increases, the revenues will increase out there. So I think that will be a good sector. Pharma was a sector that stood out today. And for me, surprisingly, Nikunj, I have not been a big believer or I would say, understanding of pharma. But increasingly, I find that the Indian companies, the people who do CDMO and those kind of works will probably make money. But increasingly, there are companies in India that are doing intellectual work, intellectual property work, patented work which will patent molecules, and they could could be anywhere from antibiotics to vaccines to, other drugs for Alzheimer's and the like. I think this is a good time to buy those businesses. One of the businesses that we bet on recently was a company that explores mineral rights, because I think there will be a full-on interest in people that can control rare earths. So you want to try and find positions and bets accordingly. Yeah, I don't really find a dearth of opportunity, to be honest with you. When I go and visit the companies, I'm fairly encouraged. So I am unfortunately not belong to the camp of people who say there's no value yet. I mean, value is in the eye of the beholder, as beauty is. And I am typically, I'm not fully invested, I'll grant you that, but I want to be fully invested. And generally for me, it's a slow process. I can't be bearish on day one and day two be fully invested. That's just not my style. I move in more gradually. But it's not certainly that there's a dearth of opportunity that is preventing me. I think it's just my style that is preventing me from being fully invested. I hope in the next 3 to 6 months, I will be fully invested.
Mr. Damani, I'll establish this point just for the benefit of our viewers, which is that markets, they follow a cycle. There is sometimes panic, and there is sometimes excitement, and there is sometimes euphoria. So if you have to look at the market from your vantage point, which end of the market right now has scope to get derated in next 3 years, and which end of the market could get re-rated? It could be earnings, it could be P, or it could be both.
I think it's just the world will now break free of America. What America had on our psyche is, it's good. It was very good. I lived in America almost 15 years of my life. I understand American culture. I actually believed in American exceptionalism and all this. And it's very, very painful for me to see what Donald Trump has done, President Trump has done to America. So, I would tend to think that America is likely to peak out more than the rest of the world. I think the rest of the world probably is going to have, if you recall, remember, just to give you another example, Nikunj, in 2003-04, India was dominated by technology shares. Infosys kept giving bad numbers. And I had a conversation with a late friend, Rakesh Jhunjhunwala, and I said, unless Infosys delivers good results, market is not going to be able to move. And then he taught me a lesson in life. He's saying that, if Infosys won't deliver bad results, the market will discount it and then move on with other stocks that are delivering good results. And that's exactly what happened. If you remember, in 2004, the market discarded Infosys with a very bad set of numbers. And instead of collapsing that day, the market moved ahead with the cement shares, the infrastructure shares, the real estate shares, which was then to lead the bull market higher. So I think beyond a certain point, market will not pay attention to America. We always watch the Dow and watch the foreign flows as indicative what's India going to open at. The foreign flows already have a lesser impact on India. I think the Dow and the Nasdaq over time will lose their relevance. They will be like the FTSE or like the DAX or like the Nikkei stock market, one of the many markets that you watch. So I think that the part of the market, the part of the global economy, emerging markets, China, Japan, will now grow despite America not growing. And I think clearly those who are a bit more domestic focused, internal focused on their markets will probably do better.
Mr. Damani, my last question, and we'll perhaps put this question again on our social media platforms. And this is an advice to the young India in their 20s and early 30s. How can they really benefit from the power of compounding? What makes a great investor? Is it intelligence? Is it patience? Is it psychology? Or is it luck?
I love answering this question because it's a subject very close to my heart. I think Warren Buffett has a famous quote. I don't have it exactly, but it's somewhere in my office. But he says, all it takes to go from the middle class to the moneyed class in one generation is compounding. And if you just understand that principle, you will benefit. Now, let me put it in context for you. If you're young in India, India is a young country. I think the median age of India is 25, 26, something like that. So you are in your investing years. So instead of praying for higher prices, you should pray for lower prices. People like me who are 65 plus pray for higher prices because we want to exit. But if you're young and the crisis brings prices down, that's a great time for you to invest because you're looking to invest for the next 10, 20, 30 years. So the basic advice to you is what is true all along is first invest in appreciating assets, not depreciating assets, because they have a chance to make you money, and invest for the long term. If you go and see over the last 30, 40, 50 years, equities have outperformed almost every asset class, whether it's gold, whether it's real estate, whether it's bonds, by maybe 200, 300 basis points. And that over a 20, 30-year period is an astronomical difference to have. So as I've also answered this question, I'll finish with this particular question, that whenever I ask the great investors of our time, what has been the best decade to invest? Was it the 1990s when Manmohan Singh liberalized India? Was it 2000 when it became apparent that India became a TMT power? Or is it today? And they always tell me that the best time to invest is the next decade, because the next decade offers a plethora of opportunities that weren't available to us. So there'll be more companies built, more brands built, more billion-dollar businesses built, and more opportunities to make money, as good as the opportunities that I had. And I truly believe that when I came of age in the 80s in India, I was part of a blessed generation in India. The minute I came, the Berlin Wall fell, globalization took effect, liberalization happened. So we are part of a blessed generation. But I truly believe that the next 10, 15 years, if we stay our course, remain true to our feelings, not get carried away by protectionism and tariffs and inward-looking stuff, India will prosper and do well, which we need to do to bring our 1.5 billion fellow citizens out into prosperity. So I believe we are on the course to do that. I don't believe that we will change in India. And I think America will learn a lesson that it has taught the rest of the world. It really, really pains me to say this, Nikunj, particularly on national television. America was the shiny city on the hill we all looked up to. And in 100 days, Donald Trump has destroyed what everyone aspired to be, America.
Well, one man's food is other man's poison, vice versa. So I hope America stays up, but I really hope the rate of change, in a sense, would benefit a country like India. Always a pleasure and a delight, and on behalf of everyone from ET Now and all our viewers, thank you for your valuable time.
Having me.
All right, guys, let's take a break. Ramesh Damani, he feels that the rate of change is against America, but that does not mean it is end of the world. There is a large population, there is a large demographic advantage which other countries are enjoying, and I think that is getting visible in the way how markets have been mature in their reaction. No panic. Domestic themes in India are up. China almost closed in the green. Europe has opened and no real shakeout there. So the tilt now is, well, quit America-dominated businesses and go back to Europe, Asia, or domestically facing businesses.